Hi, welcome to our session on competition and financial inclusion in DPI. My name is Hannah Draper. I'm an advisor to Consumers International and also the director of a digital rights consulting firm called Payne & Routledge, and I'm very pleased to be the moderator for this session today. So, what is DPI, the topic that brings us here? DPI stands for Digital Public Infrastructure. And while it may look different depending on the country or jurisdiction where it's implemented, it has a few things in common. So digital public infrastructure is generally a set of publicly driven, interoperable digital components that can support a range of services. To date, discussions about DPI have been focused on three primary functions, which are identification, data exchange, and lastly, financial transactions, which is the topic we'll be discussing today. So DPI has already demonstrated itself in places such as India, China, Brazil, to be truly transformative in terms of economic participation by making it as easy to send money to someone or to a company as it is to send a text message. At the same time, like with any emerging digital technology, it's important that it is designed and deployed in ways that that are truly fit for purpose and responsive to consumer needs, and also balance values such as competition and inclusion. There have been several international initiatives in the last few years around DPI. For example, the 50 in 5, which is a drive to support 50 countries to implement DPI within 5 years, and also the UNDP's Safe and Inclusive DPI initiative. And you may want to check out the Safe and Inclusive DPI framework that was recently released by the UNDP alongside the UN General Assembly last month. So I would now like to hand it over to my colleagues to introduce themselves and to discuss learnings from their experiences with financial DPI in their countries. Thank you.
Thank you. Thanks, Anna. Hi, everyone. My name is Smriti. I'm a researcher based in India, and I'm also currently the research ambassador with the Interledger Foundation. I'm going to focus my intervention. India has a number of DPIs, lots going on in that space, but I'm going to focus on, given our interest here on digital payments, the DPI called the Unified Payments Interface, or UPI. And this, of course, understanding this has to be in the larger context of digitization movement in India, which has been really geared towards using technology for solving societal level problems, and started with digital identity, etc. But on UPI itself, if we look at the motivations, the starting point of it was, at least from the government's perspective, was about moving the country towards a less cash society. So India has traditionally been a very cash heavy, and it remains to be a very cash dominated transaction economy. And one of the motivations was to change that and move towards more and more digital. The other articulated motivation has been around financial inclusion, about making services more efficient, making it safer, making it more comfortable and convenient, so that people feel we're obviously talking about a population, a lot of which is not educated, a lot of which is coming online for the very first time. So you're dealing with a population group where coming online has been a challenge, and DPI and digital inclusion has been a challenge. So in that context, financial inclusion has been the other goal. Competition itself has not been an articulated goal at the starting point, but the way the DPI was designed, competition effects were inherent in that, because just to explain, the choice that was made was to rely on APIs as the basis for the rollout of this DPI, and inherently, the reliance on interoperability meant that it was meant to break, the silos of market power which were existing in the economy, where all transactions had to be bank-led. And even within UPI, it has to be a bank-led ecosystem, but it's allowed new apps which are called third-party payments app, which are non-bank players, who do the consumer-facing interface. So the customer belongs to, say, a Google Pay or a WhatsApp or an Amazon or a Paytm, and at the back end there is a bank, which backs and supports the transaction, and there is a settlement entity called the NPCI, which does all of this. So that's the basic ecosystem, and we can go a little bit more, into details in a while, I'm sure.
Okay, thank you, Smriti. My name is Nicolo Zingales. I'm a researcher in Brazil, FGV. It's a university based in Rio de Janeiro. So what I wanted to complement to this session is to bring a little bit of the history of the interaction between competition regulators and the financial sector regulator, and how the goals of the two have been played along with each other. So in the context of the financial sector, we had a history of large banks concentration and a lot of practices that were considered anti-competitive by the competition authority. So the first interventions were to stop exclusive deals between the providers of payments and, for example, the merchants or the credit institutions. This was the first intervention that kind of opened up by securing access for everybody in the market by eliminating exclusion. But the second intervention was done by the financial regulator, which imposed interoperability of payment systems. So this was in 2013. Then we had an intervention again by the competition regulator in 2016 that tried to help an aggregator that was called Guia Bolso, that wanted to do open banking before open banking was a thing, was trying to get customers to pull information from the banks into their own systems. And the banks were not allowing this to operate smoothly. So again, we had a competition intervention. Then after this lesson that was learned in a competition context, we had the open banking that was introduced. This was in 2021. And at the same time, the regulator introduced the PIX, so this instant payment mechanism that is imposed on all the major banks that have more than 500,000 accounts. And so with this mechanism, there was a lot of more people having access to banking and financial services. Once we have the PIX installed, we had nice interaction between the competition and the financial sector regulation. There was an increasing need to ensure that the financial regulator understands the competitive dynamic of the sector, but at the same time, there were some tensions between the two. So there is a view that says that some banks that are larger have a bigger power to prevent frauds and attacks, malicious attacks, and therefore when the banking sector imposed this measure only on the big players, it encouraged also new players to come in by not having mandatory application, but by having the opportunity to join. This led to a market where we have a lot of players, but not all of a sudden all of them are capable to deal with all the fraud and the ability to monitor and collect information. So there is this tension also that is exacerbated by PIX in a way that creates a potential tension between the two objectives. Now, a big challenge is how to structure a governance framework that ensures that there is a minimum level of security that the regulator provides, and at the same time leaves some space for experimentation by these different players. And I think this is one of the challenges that we're going to have to deal with, how to structure the governance framework so that there is an understanding of the competitive effects of the measures that are being taken, and at the same time you allow to leverage the power of the bigger institutions to identify the problems and prevent them from happening. So I think Brazil shows that there was a success story with PIX. We have a big adoption, but at the same time what is lurking in the background is a lot of data breaches. PIX also makes more easy to make frauds. There's a lot of violence in Brazil, so a lot of people are kidnapped, and there is a request to make an instant payment. The financial regulator is trying to address that with some measures to get reimbursement in case there is a fraud. But this governance of how the system works to get the reimbursements is now being contested by some consumer association, because typically what happens is that the transaction is made, then immediately there's an on-one transaction to another account, and the current mechanism of reimbursement only catches the first. So there is a big discussion regarding the rules, how they should be set up to prevent the frauds and to compensate consumers. And I guess this is one of the things that we can talk about on DPIs, how we can ensure, maybe later on in the second part of our conversation, how we can ensure that they address these problems effectively.
Hi. Hello, thank you. My name is Andrés Calderón. I'm a law professor at Pontificia Universidad Católica del Perú. I'm also an external legal advisor to the board of directors of the Peruvian Central Bank. But as you may imagine, I'm going to make the formal disclaimer that all my remarks are made on an individual capacity. So, like Peru is famous not only because of its food, obviously, but also because of economic stability, in spite of obviously political troubles, and also because of the control of inflation, which actually this is a fact that contrasts with Peruvians' informal economy. Almost 70% of the active economic population works in informal conditions. So this is a key factor that, as you may imagine, has some effect on financial inclusion. We have a very low degree of financial inclusion. However, after the pandemic, there was a significant growth of the number of people having access to a bank account. We grew from 42% in 2020 to 52% in 2022. But most notably, the number of digital payments tripled in the same period. So we went from 57 payments per capita, digital payments per capita, to 152. So, and this was mostly due to the use of digital wallets. This data shows that there might be enough room and opportunity for getting people access to financial services, specifically using digital services. And what also happened in 2022 is that the central bank enacted some rulings mandating interoperability between private service providers, payment service providers, and there's obviously many academic empirical work showing the connection between interoperability and financial inclusion. However, there are a couple of hurdles that need to be addressed, at least in the Peruvian context. The first one is that monopoly power. So traditional, one traditional Peruvian bank owns the largest digital wallet in Peru that covers 80% of all digital payments that I mentioned that tripled in the last period. And the other one is that there is a vertical integration in many of the largest actors in the payment sector. So those two obstacles or hurdles have been some elements that have either slowed down the interoperability ambitions of I would say the Peruvian Central Bank, but I think as an economy-wide, it's a good objective. And this is why, or at least it's one of the key drivers that led to the Peruvian Central Bank to enter into an MOU with MPCI from India to to deploy a similar public rail for instant payments, similar to UPI. So, as you may have, as you may imagine, so while financial inclusion might be the end goal of DPI in Peru, there are some very specific competition concerns that have been drivers for going to the next step from interoperability, mandatory interoperability, and then DPI.
Thank you. Well, my name is Fernanda Pizarro. I'm very pleased to be here. I'm a Chilean lawyer and specialize in technology in the payment industry. And I don't know if, well, probably you don't know, but in Chile, the governments in general are very, very enthusiastic to promote and support innovation, technology development, entrepreneurs, etc. But in terms of DPI, in my own opinion, we lack a lot of steps to be able to compare ourselves with India or Mexico or Brazil. So, and this is mostly because around 30 years ago, we have this monopoly which is held by an enterprise named Transbank. Okay, so even though this is changing now, Transbank was the only operator in payment industry for several years. So what this means in the practical, this means that, for example, all the POS was owned by Transbank. And about digital payments, the most famous network of digital payments was owned by WebPay, which is an enterprise of Transbank. And even the ATMs, the network of the ATMs were owned by Redbank, which is an enterprise of Transbank. So this is what, this was great. I mean, we never actually put a question on it, but recently this changed, and this changed because of the pressure that the Court of Free Competition make. And nowadays, actually, and this is mostly recently, but nowadays we have several new regulations, like for example, the fintech law. The fintech law only have a year or maybe 2 years, and the main objective of the fintech law is to promote the competitiveness, is to open the market. So now our reality is very unique, if you want to, because there are a lot of new challenges, there are a lot of new fintechs who actually are searching for this, to cope with this new market that is just opening, right? So thanks to all this pressure that the competition agency and the Free Competition Court put in not only in Transbank, but in the whole national market, now, for example, we have this sentence of the Supreme Court that mandates to not the interoperability, but to the commerce to accept all kind of cards. And maybe for you this is like basic, but for us, for example, until only 3 months ago, there were commerce that were able to reject you if you want to pay with a prepaid card. And of course, for you, it's like, why would you make that? Well, because if you are a commerce, you were obligated to accept the Transbank terms, right? And if you don't accept them, then you are not allowed to receive payments. So, but now, since the Supreme Court, all this pressure, all this monopolization, start to crumble down finally. And well, that's the beauty of the competitiveness, right? And the open the market. So we are evolving to be there. We want to be as far as you go, for example, but we are on our way out.
Thank you so much. So I'd like to ask a follow-up question, if I may. I'd like to ask each of you about your opinions regarding immediate priorities to ensure that competition and inclusion are meaningfully incorporated into DPI policy and design. And relatedly, I'd like to ask you who you think should be involved and in which ways to ensure meaningful and diverse participation. Thank you.
Thanks for that. I've spoken at quite some length about competition yesterday and my issues with that ecosystem, so I'm not going to touch on that. Let me speak a little bit on what could be done better on the financial inclusion side. I think there what's really lacking is emphasis on measurement. So if you look at, the ecosystem, whenever we talk about, whether there's inclusion, we're only talking about aggregate numbers of number of people who are using it, number of transaction, and that's really, the target which people are seeming to aspire to. But really measurement has to go much deeper than that. We need to know, what is the demographic distribution of these users. We need to know what are the failure rates in the transactions, what are the causes of those failures, what is happening on redress, what are the outcomes out of this financial use. So broadening that question of, what are we measuring when we talk about financial inclusion. And here I just want to draw upon the work of economist Susan Thomas from India, and we have actually an upcoming Interledger podcast episode with her, which I would encourage everyone to listen into. She's great. But she's worked with some colleagues on this question of measurement, and they divide this into, looking at the inputs, the outputs, and the outcomes, right? The inputs is, do people have a bank account? The output is, are they using it? How often are they using it? And the outcome is that what is the impact on well-being out of all of this, right? Because that's really the end goal of financial inclusion. It has to improve your life in some way. It's not just, it's a means to an end, but the end is well-being. And on how to involve stakeholders, I think there's lots to be done domestically, but I think since you spoke about the UN initiative, and how the UN is working towards safeguards in the DPI ecosystem, I think the conversation is going great, but where it is at right now is that there are a set of principles that have been articulated, but there isn't really too much thought on, how do we monitor that countries are actually implementing these principles, right? That's largely left up to the countries or to stakeholders within those countries. And I want to move this idea of, mutual evaluation. So we see this in some other contexts, things like, the FATF, the Financial Action Task Force, which is the global body for anti-money laundering compliance. They have this mechanism that every few years the members would get together and review another country, right? So say all of these countries get together and review India's DPI and say, is it really inclusive? Is it pro-competition? Is it offering redress? So all of these parameters which everyone has agreed to at a high level, are those really being implemented as per, the peer review of the other countries who are also adopting DPI? I think in the medium to long term, that's the direction in which we need to be going.
So thanks, Anna, for the question. That's an important one. So I think first we need to understand financial inclusion maybe as part of a broader concept, which is financial citizenship. So if you are included, but you don't know how to use, the instruments, you're not necessarily part of the ecosystem, and you are not an active part of the ecosystem. So I like to use this term and link to an initiative that was done by the central bank in Brazil, which was based, interestingly, on a collective fund that is fed by the sanctions, the fines that are made of competition infringements. So when you have a competition infringement, there's a fine imposed by the authority. It will be put into this fund, and then there's a committee that decides over how these funds can be used, and people can apply and suggest a project. And so one of the projects that was carried forward by the central bank was about, it's a program called Learn Value, which is about financial education. So I think this is essential for people to be able to participate, and this also has ripple effects, not just on the consumers individually, but also has impact on the ability of consumers association to participate in the governance setting, in the agenda setting over the regulatory policies. So right now, the PICS has a forum that allows the participation of also consumer association, but these are invited by the regulator, by the central bank, and there is no duty to involve them. There is also no mandatory consideration of the inputs that are given in this forum, so it's just a consultative forum. And I think what we would need to do to move forward, and in line with the idea of DPIs being public because they are being put into a public use, they have a democratic governance, not just because they are owned by the public sector. We have seen that in many examples, DPIs, in fact, they are not public in the sense of ownership. But what we will need is a more participatory and democratic way to decide over the use of DPI. So there is a criticism that the central bank is not only the regulator, is also the operator of the platform. And having these two roles can lead to a conflict of interest because you have access to a lot of data about the transactions, and on the basis of that, you can develop products that other payment mechanisms are not anticipating. They're not able to get the same nuanced view about the financial system. So I think one measure that I would suggest as a way forward is develop more participatory governance mechanisms, and not only in terms of participation, but also in terms of what you were saying, like accountability mechanisms. You need these forums to make sure that we can bring the regulators to the task, or these committees to the task and say, has it been effective at delivering the objective that you declared? And there, of course, you might have some tension still between inclusion and competition, but at least they are dealt with in a transparent manner. And I think the priority when we are talking about a financial DPI should be on the regulator, the central bank, having priority over the competition regulator, but this doesn't prevent a dialogue. So there should be a mechanism to consult the competition agency, for example, about the competitive impact of some of the measures, as I was saying before. And also, this will lead to a more informed view by the competition authority when they are enforcing competition law. If they are more holistic understanding, not just focused on efficiency, but understanding that inclusion is one of the dimensions on which consumers want to choose different products, that can be something that the regulator pushes, by learning from this dialogue with the financial regulator.
I wish I could give my time to Nicolo and Smriti to keep talking about their experience, because many of the concerns that they have addressed are similar to the one that I feel it's being discussed in Peru, even though we are at a very early stage of the deployment of a DPI. But let's take into account that for a country that it's about to implement a DPI for immediate payments, it might be troubling to know that this infrastructure is going to be owned, operated, and regulated by the same entity. Even though even if it's a great entity with great reputation, in the case of Peru, the head of the board of directors of the Peruvian Central Bank has been in the same position for 20 years. It has more stability than any other Peruvian in his work or her workplace. So even though it's well regarded, it's respected, there are some basic concerns. And just to make sure that everybody follows on this issue, from a competition law perspective, there are some basic rules or principles that all people would accept as a general rule. There's the general rule of freedom of contract. There's the general rule of free prices, or that the fees are not regulated unless you are in the situation of a natural monopoly, and you can get access to people's information provided that you get consent from them. But when deploying a DPI, there might be some exceptions to that rule. For instance, you have to address whether the interconnection to that public rail is going to be voluntary or mandatory. And if it's going to be mandatory, what's the threshold for making it mandatory? You have to also address the issue of fees. For instance, are we going to follow India's example of forbidding the merchant discount rate, or are we going to put a fee, or it's going to be free? And in the case, if it's free, who is going to bear the costs that associated to the processing of those transactions? And who is going to get access, who is going to manage the directory of end users with the alias and the identification of the end users of the platform, and can a private service provider get access to that information or not? So these are very important questions that need to be addressed at the outset, and as Nicola mentioned, for predictability purposes, you could establish a specific regulation and say, okay, here the priority might be to get to financial inclusion, even over some like general competition law principles. And probably you would get that in that context that central bank's decisions trump competition law enforcement by the competition authorities, or at least the competition authorities have to take into account those specific regulations. And I feel that could be the case, but we need predictability in a way that we know in advance what are the rules and what might be the repercussions of that specific set of determinations. So I think that competition and financial inclusion might be at conflict, or at least in tension in some ways, but that tension could be a little bit, we can address correctly if there are some specific regulations regarding those issues that, as we know, at least we can take advantage as a country, that have already been discussed and addressed in other countries that have already deployed DPIs.
Thank you, Andres. And I think it's fascinating what you guys have talking about, because since in my country for the last 30 years there were only a monopoly, actually we love the free competition. We want to be more competitors in our markets. And that's what I think, in order to integrate more competitors and in order to make a DPI with really inclusion aspects, actually I do think that the policy and the design of that policy has to be a priority for our regulators. For me, the competition law or the free competition court is not against the new type of policy we have to be with a financial inclusion, right? Actually, that's how because we are now regulated, that's why now we don't have that monopoly of Transbank, or not that rough again, at least. So I think the regulator have to be proactive in public or citizen consultancy. And I do think that people need to be heard, because especially in Chile, where there's no interoperability, and there is not that much inclusion since we have that monopoly. To hurt people means to include them, right, in the design of the municipal policy. And I'm very pleased because Chile have made great efforts in the past 2 years, and actually the CMF, which is the agency of the, not inclusion, but the payment industry, in very short time take a lot of advances in the regulation. Only, for example, just an example, only 2 days ago, I mean, we all were here 2 days ago, the Financial Market Commission, the CMF, which is this agency, opened a public consultation on the new regulation about fintech information system. And this is an openness of the information system in fintech, right? And this allows to all the stakeholders, to all the citizens who actually has an interest, to contribute with their perspective. And this promote both competition and inclusion. And this is vital because things in Chile are happening, and not happening now. No, not yesterday, not 2 years ago, not 10 years ago, it's now. So there's so much to do. We need people to know who is doing, and the beautiful of everything is that the agency knows this. They know that they need this perspective in order to make a really regulation that doesn't close the market again, right? So they actually, if you were able to go to another summit in Chile and listen to their regulators, they say, we don't know how the market's supposed to be in other countries, right? So we need your perspective. And since we don't know, we make this citizens consultation. So I guess what I'm trying to say is that it's essential to any DPI policies, not only in Chile, to be very focused on